Moving on, we will be
Thank you.
discussing, thank you so much, panelists. Moving on, we will be discussing how philanthropic capital and incubators can come together to create a stronger momentum for climate tech innovations in India. Incubators and accelerators are a backbone of the innovation ecosystem when it comes to building a stronger deal pipeline. As the research also highlights, climate tech startups have unique characteristics. They are in fact multiple valleys of death for climate tech startups due to deep science technologies with longer gestation cycles, all of it requiring patient capital at various stages of the enterprise, but more so in the earliest stages to take it from the lab to market. This session will therefore explore questions such as how to build a high quality, healthy pipeline of climate tech innovators. What are the challenges for incubators and accelerators in building this pipeline in India? And how can philanthropic capital really enable this? To find answers to these, let me dive straight into the panel without any further ado. The session will be moderated by Santosh Singh, Director, Intellicap. Intellicap is the advisory arm of Avishka Group with a deep focus on enabling ecosystems and channeling capital to create and nurture a sustainable and equitable society. Joining him on the panel, we have Anant Aravamudan, Sector Lead for Climate Action at Wilgrow Innovations Foundation. Wilgrow is one of India's pioneering incubators of social enterprises. Wilgrow believes that innovation and market-based models are powerful solutions to alleviating poverty and creating social impact at scale. Next up is Ashish Kumar, Climate and Innovations Lead at Shell Foundation. Shell Foundation is a registered charity founded by Shell that creates and scales business solutions to enhance access to energy and affordable transport. We have Bo Ann, Impact Investment Manager, Doon Foundation. The Doon Foundation supports pioneers who are committed to a green, socially inclusive and creative society. We have Carol Dahl, Executive Director, the Lemelson Foundation. The Lemelson Foundation was established by Jerome and Dorothy Lemelson in 1992 with the vision of cultivating future generations of inventors to create a better world. To date, the foundation has provided more than $290 million in support of the mission. Lastly, we have Pratap Raju, founding partner, Climate Collective. Climate Collective is a nonprofit focused on empowering entrepreneurs throughout the global south by building and strengthening local climate startup ecosystems and bridging the gap between the development and private sectors. Over to you. Over to you, Santosh.
Thank you. Thank you, everyone. And good morning, good evening, and good day for the different time zones people have logged in. And, Dipanshi has given a very, very good overview of why we are together here. I think I'll put some pointers to give it in a context that why we need to discuss about the climate tech incubation and how we need to support that. Just to give you context in terms of numbers, because I think part of India investment discussion here, we can look at those contexts a bit better. This year, the first half of this year, received $16 billion in climate tech from venture capital. This is the most prominent category that has received the investment from the venture capitalists. The single most category. Last year, it was something in the range of $12 billion. So the growth is phenomenal. In fact, the venture capital growth is 100% or 132% this year over last year. This segment grew by 250%. So this is one of the hottest segment in eyes of venture capitalists or those who are looking to get impact. And I can safely say that just wait for the COP26 to complete, and you will see that there will be far more attention and discussions around this. What surprises in this space that this is the kind of investment flowing to this space requires a very, very strong pipeline of incubator accelerators and people who are nurturing those innovations so that they can provide end-to-end kind of goals of nurturing innovations and taking them to scale. That ecosystem is slightly more developed in developed nations, but in the global south, where most of the climate tech are needed, we are one of the biggest victims of the climate crisis. So the climate tech is much more relevant here. the ecosystem is not that, great. And the panel that I have two of the practitioners who have been nurturing innovations in climate tech, and I think Wilbro has been nurturing innovations in multiple other sectors, so they can draw from there. But Pratap has been focusing very much on the climate piece of the puzzle. And here, when I talk about climate tech, I'm using the definition of any technology that either increases the resilience of us to kind of deal with climate change or contribute to mitigation. So I'm using a very broad definition and not confining it into a narrow sense. So, Anant and Pratap are going to give us the perspective that how they see the role of incubator and accelerators contributing to this a kind of goal that we have more climate tech scaling up. At the same time, they will also point out the support and the uniqueness that this space requires. Because I think Dipanshi hinted at that climate tech incubation is very, very different than the other sectors. The deep science, the multiple kind of unique necessities that it has, the kind of return expectation that we have, because a lot of climate tech goes to public goods, not into the private capital creation. So who is going to support that? Philanthropic capital plays a critical role. It can disrupt this space. So the panel consists of two practitioners who are on the nurturing side, doing the hands-on work on supporting the innovations, and three pioneer foundations, Lemelson Foundation, Dune Foundation, and Cell Foundation, who have been supporting entrepreneurs and incubators in multiple space in this space. So I'm looking forward for understanding the challenges that how we can disrupt this space and how philanthropic capital can support. The entrepreneurs would give us the perspective where they need the disruption. The philanthropic foundations would provide their learnings and kind of insight that how they are working or how they are planning to solve these things. So that's the context that we are going to speak. This is the longest part that is spoken. I will be silent after that. The structure for the discussion today is that I'll start with Anand, and then I'll go to Pratap, and then I'll follow with my other panelists, ending with Assis. The first part of the conversation would be of around 5 minutes each, and they would provide the remarks on the things that we just discussed. With that, let me invite Anand for his opening remark. Anand, over to you.
Thank you so much, Santosh. It's a real pleasure to be here amongst all of you for this session. Santosh, you brought out this very interesting statistic that there are $16 billion of investment going into climate tech this year. As an incubator, and among the many incubators in the world, it's our job to prepare the pipeline for this investment, because without that pipeline, I think that money is not going to get anywhere. So I guess the question is, what exactly is needed to get that pipeline going, and how does grant play a role? I mean, that's a question we constantly ask ourselves. I think Dipanshi alluded to these valleys of death, and this is very real in today's world, and especially in climate tech. I think the valleys of death come into play, quite heavily. The first, of course, is the tech valley of death, the technical valley of death, where some of these disruptive innovations, as we are calling them, they need to be proven. The technology, and the way the technology is delivered, that needs to be proven, right? So here, of course, grant capital plays a very critical role. But this is more the realm, I would say, of the academic incubators, because a lot of this disruptive tech gets done either in the academic incubators or government-funded tech labs, or, of course, in some garage startups where this is bootstrapped. So here, yes, the incubators play a role, but especially an incubator like Wilgrow, plays a much bigger role in the second value of death, which is a commercial value of death, right? And this is where we see, a lot of startups really failing. They cross the first one, but when it comes to scaling up their innovation, when it comes to making it a commercial venture, when it comes to raising funds, I think this is where the real problems start, and we see many more failures here rather than in the first one, the technical value of death. So what is different about the climate action space, you might ask, right? I would say there are two or three things, right? One, I think this is a new space, relatively new space. Not the ecosystem itself is coming to terms with what it takes to create successful climate action models that are both impactful but also commercially viable, right? So there is a lot of concept selling involved. I think the best way to explain it would be to take an example which we and these are examples we keep seeing on a day-to-day basis, right? Let's take the issue of stubble burning, and let's say there's an innovative startup that is trying to convert the paddy straw, which is getting burnt and creating huge amounts of pollution in the capital region of India, here's the startup which is taking the straw and converting it into building materials, maybe flooring blocks, maybe wall panels, false ceilings, whatever, right? So firstly, and let's say they've got their tech reasonably sorted out. They've produced, 20, 30 samples of these tiles, which they can show anyone who's interested. The first question which strikes them is, how do I sell this concept, right? Because if you go to the building industry, everybody is already kind of habituated in using certain existing materials, and this is the new concept. So it's not something where you can walk in and just sell. You have to sell the concept first. This is true of all climate innovations, this concept selling. Secondly, I think, having a concept or having an innovation like this, approaching funders to kind of scale this up, be it a debt funder or an equity funder, is extremely difficult because, again, as I said, that ecosystem simply doesn't understand how this works, how it's going to scale up, what are the dynamics. These are not business models which have a track record of 10 or 20 years, right? So we have seen incredible amounts of difficulty in convincing both kinds of funders, equity and debt funders. So again, the scale, starts suffering. Then comes the issue of certification. The minute you say climate action, the minute you say green, clean tech, everybody wants to know whether you're certified. If you're an organic, player, they want organic certification. Even in this case of, the example I gave you, everybody wants a green building certification. And these certifications are extremely expensive. And without those, you can't sell, right? So you see that, there are so many of these barriers which are very difficult to overcome if you keep seeking kind of commercial return-seeking capital. And I think that is where grant capital can really play a huge role, right? In kind of smoothing out this part of the journey, the commercial value of debt, and really kind of helping these disruptive innovators to reach a stage where then they can kind of get access to other forms of capital and make the innovations reach as many people as possible. I think I'll stop there, Santosh. Obviously, there are a lot of learnings in terms of how this deployment of grant capital can happen. But I think I'll save that for probably the next round of comments. And I'm sure all the other speakers, will have more to say on this.
Thank you, Anand. I think you brought a very valid point of how to kind of use the grant capital to help the enterprises for the commercial value of debt. And I think we will deal with that, in this later conversation when I ask the learnings from the philanthropy and others, that how they have kind of done innovations and dealt with that. But moving on to my next speaker, Pratap, you have been doing phenomenal work in promoting climate tech incubation and the climate tech in general. So over to you. Your thoughts on how philanthropy can change this space and make it much more robust and happening.
Right, great. Thank you, and thank you for this invite to be on this panel. When I started 5 years ago, actually I went to get some advice as we were learning about this space. I was a solar and wind developer 11 years ago, and as I transitioned to supporting clean tech startups, it was not the same industry, even though the same kind of technology of being on the development side. But I do have a slightly different view of what's happening. When I started in solar, people told me it would not work in India. I've told, I've even 3 years, 5,000 megawatts down, people tell me solar doesn't work, from corporate titans, et cetera, when we're starting to move to C&I. This was 2011, 12. And I think similar stories come out in the startup ecosystem in India from years ago. I started 5 years ago, actually in partnership with New Energy Nexus. It's a nonprofit set up by the state of California in 2004. I'm New Energy Nexus India as well. And I also started with a group called Climate Kick, KIC, which is the EU's leading innovation initiative. And one thing I learned, and I was a trainer for Climate Kick, is California and Europe have ecosystems in place and support that we didn't have, and perhaps to some degree still don't have here in clean tech. Bringing the ecosystem together, maybe because of lack of funding, maybe because still the nascency of this sector. So I came and said, okay, what if, how do we build this startup ecosystem? Not an accelerator ecosystem. I only had myself and one person back then. Now, following what's happening on the ground, I think we were able to really scale and grow. We now have had, up until last month, 600 clean tech startups in our accelerators. And with 3 or I think 4 more programs in the next 3 months, we're going to hit 700. And that's a reflection of how much activity is actually happening on the ground versus that first Nexus Solar Hackathon in 2016. And when I start talking to corporates and I see the developments amongst corporates, when I talk to investors and you see angel investors pretty actively supporting clean tech, even in early stages, maybe more, we need more, but this is a fundamental shift. In fact, last year or a year and a half ago, one of the leading angel networks told me the number one focus of their angel network is sustainability. And if anyone's ever worked in sustainability, that's shocking, but it's backed by their network, their internal fund, investing in clean tech. Now, we do need more, and there's certain sectors that absolutely, especially what I'm saying applies. But I think there's some very positive trends, and if we had to look at how to support this ecosystem, the things that I have learned is we have a pretty impressive clean tech startup ecosystem. Now, if I asked you how many clean tech accelerators are there, it's very hard to name more than 5. But if you look under the hood, there's a great incubator TBI called TrekStep. And 2 years ago, Geeta had come and we met, and she was telling me for the last 2 years or something like that, 100% of their startups were in clean tech. We met again recently as well, and a very significant portion under the hood, there is a lot of clean tech happening. So when I start putting these together, one thing that comes to mind, not just the incubators, accelerators, the corporates who are interested in solutions, etc. We need more ecosystem tools, platforms, and linkages. These are, I think, what will bring together a large number of people already on the ground. And I think if I had to guess from some of the applications I see for new accelerators, etc., this ecosystem support side will double, triple over the next 2 years, mirroring what's happening on the ground with accelerators and incubators. Now, we have a very large platform. We get over 200 to 250 clean tech startups each year, and about 6 or 7, actually 8 or 9 accelerator programs. And these numbers are increasing here in India. So some of the stuff that we have seen, in fact, what Anand was saying is it's hard to get funding to these startups. Now, the private sector, barring what I said about the angel investors, today's angel investors start much higher, 2 crore and above, versus maybe a few years ago when you'd see 50 lakh checks more common. Now, not a lot of our clean tech startups actually are ready to absorb a 2 crore above check. In fact, we have a bulge of startups that are just getting the first pilot sales, just getting traction. Investors are still waiting. They don't want to take a risk. In fact, there are amazing startups actually that need capital now, but don't have more than a lab pilot or something like that, and need capital to actually unlock their potential. And this is where we could see, I think, grant capital supporting. We started an angel network called Climate Angels Network. That's, in fact, we have our first summit for emerging South Asia next Monday. Actually, it's supported by DFAT, Australian government. We also have this angel network that's being supported by DFAT in Southeast Asia. And this platform is meant to get more capital, cross-border capital. There's a lot of clean tech capital in this early stage waiting at our borders, trying to come into countries here in Asia, as well as a lot of angel groups here when they're putting deals together, syndicating angel investment deals, trying to find experienced clean tech startups in this early stage. So platforms maybe like Climate Angels Network could be very, very powerful in helping all these actors that we need to bring in the funding into our ecosystem. Maybe another example, we got great support from our funders, Good Energy Foundation and SET Fund, to support a program we call Climate Start. Climate Start is a network of accelerators and incubators where we try to come together and share many things from module support. This is something I learned, especially in Climate Kick, access to investors, and we're looking at other ways that a group of incubators and accelerators can come together and not have to do this all alone. I think platforms that can bring what's actually happening on the ground in many ways. Maybe we don't see it, maybe it's still too early, just starting, but I think there's a lot of power in us coming together. Maybe one last example is a small example, but since we do have a large number of clean tech startups, clean tech startups early stage have trouble hiring. Very simple. It's a startup. Now, why would anyone join a startup that looks quite shaky, leave a good job, etc.? How do they even get internships? This is a problem not just for the clean tech startup ecosystem, but sustainability here in India. So we ran on Saturday our second climate jobs fair, where we had about 50 jobs and internships from clean tech startups and 150 applicants this is a matching that would help portfolios with clean tech startups as a whole, and maybe other things that others are doing can really help us instead of trying to redesign the wheel each time. And Grant Capital, I think, would be quite powerful in this. Thank you.
Thank you, Pratap. I think you brought some very interesting point, but one of the key words that I'm latching onto is the building ecosystem for the incubation. So I think building the whole ecosystem that support this kind of incubation and the enterprises. And I think my next speaker, I'm moving on to Carol. Carol has been phenomenal work done by the Lemonson Foundation in building the ecosystem for supporting innovation. I'm not saying climate tech, but the whole expertise of building ecosystem to support innovation and ecosystem in order to kind of create, bridge those gaps that most of the innovators, most of the incubators identify. So the one thing that I would like to know from you is that how we can create that ecosystem that Pratap is talking about, or the commercial value of depth that Anant mentioned, is that how we can, get people over those commercial value of depth. I think there is also technical value of depth, and I would love to hear from your perspective. But other point is that in the ecosystem, climate tech has a very big challenge of attracting the right kind of human resource and talent, because it becomes very, very, deep tech kind of, innovations. So do we have that, kind of in our ecosystem to supply that? So these are the thoughts that I would love to hear from my next set of speakers. But over to you, Carol, to hear about your experiences and the Lemonson Foundation's experiences of how you have been dealing with the incubation ecosystem, especially in the climate tech concept.
Great. Thanks so much for the introduction and the setup here. As mentioned in the introduction, I'm from the Lemonson Foundation, and we work on improving lives through invention. And we do support both the pathway of how we cultivate the next generation of those inventors and innovators and entrepreneurs, as well as the path to supporting them taking their ideas to products and businesses. And we do invest a full range of sectors, including in climate change. That's an increasing focus for us. You may ask why invention, and clearly invention has shown itself to be critical in terms of creating the kinds of products and businesses that are essential to a strong economy, creation of high quality jobs, but it's essential for solving major challenges. And I can't think of a more critical challenge than climate change in terms of where invention is going to be needed to do that, why we're talking about clean tech and deep tech and so on. So what do we see? Well, we see, first of all, as you mentioned, that we need to focus on a full ecosystem. We need both the people who create the ideas needed for the future, so we have to invest in the talent pool, and frankly, that is a grant capital type of investment. We also need to invest in that downstream innovation pathway, and I'm going to talk a little bit more about some of the pieces in there. The other thing I think we need to think about is, there's a diversity of solutions that are needed and different types of companies, and they fall into different categories, and different types of companies need different kinds of support. And so, particularly when we're talking about this deep tech, highly technological solutions that are absolutely required for climate change, we aren't going to be able to address both the mitigation and adaptation with just service-based deliveries or just software development. We are going to need physical products. Those products actually take different kinds of support. So they need iterative design, testing, research and development, technically savvy mentors, and sector-specific experience. So we do need to think about that as we think about what the ecosystem needs to be built. So how do grants play a role? I'm going to talk about sort of 4 key areas where I think that support's needed and where grants can play a role. The first is in addressing company needs. So that early investment, that proof of concept, Nath mentioned that a little bit in his starting comments, which is clearly they need the support in the research and discovery phase. And then that early transition into commercialization, that does need to be grant support. They are not commercially viable at that point, and they do need that. So grant infusion is important there. The second area is in building capacity in the ecosystem itself. I think so often investors just say I'm going to go invest in these companies, right? But if you don't have a supporting ecosystem, that won't happen. And that means supporting entrepreneur support organizations. Like, for instance, we invest in Vilgrow. We've been partners with them for over 25 years, I think, and that has been really essential to helping to build the kind of ecosystem infrastructure needed. Entrepreneur support organizations need that. And when you are supporting those organizations, some of that money needs to go to the organizational capacity development of those organizations themselves. So some investment through grants and building those businesses that they can support the ecosystem going on. The other thing I'd mention is that we frequently forget that we need to support advocacy for change in policies, investments in infrastructure, et cetera, particularly in this space, to ensure that those companies have a pathway to commercialization and distribution. So the third thing I wanted to focus on was creating and supporting tools needed to build the sector. That means paying for analyses of what the societal and market needs are, what the opportunities are. Example of that is a few years back, we paid for something called 50 Breakthroughs, which really broke down the Sustainable Development Goals and asked the question, where were there market-ready, marketable opportunities for creating technologies to create solutions? Certainly needed in the climate space so that people are focusing on the right problems, the critical problems, rather than just presumed problems. The second thing is the creation of measurement tools and tracking. So an example I'd give of that is the CRANE tool that was created by the Prime Coalition, which is now being used by a variety of investors, grantors, and entrepreneurs as an assessment tool for emissions reduction potential, so that when you make your investments, you actually know that what you're investing is going to reduce emissions in the long run. That ends up being grant capital that has to fund those sorts of things. So I would encourage people to think about that. And then finally, this coming back to the pipeline, building the pipeline of innovations, which was mentioned by the previous speakers, which is funding applied research and early stage startups. Grants are key for that. And so those of us who are able to fund with philanthropic money do need to think about how we invest in that, very early stage investment. So those four key areas of support are in a way common across sectors is what we see. They're not unique to climate change. What differentiates climate change is the urgency and the magnitude of the problem. We need to be looking for creative ways to fill those gaps more effectively, to cross those barriers in the valleys of death, accelerate identification, maturation, launch of needed solutions. And I think a promising new approach is really the active alignment of stakeholders and capacities from early innovation through to market and scale for a particular set of technologies. And grant funding is part of this. I'm going to give one example now, but I'd love to come back in the second session if there's time to just give a couple other examples that look different. But one recent example is the Global Cooling Prize, which actually was based out of India. It brought together innovators, so competitors, companies, people with ideas, as well as technical expertise and coordination that was provided by the Rocky Mountain Institute, well known for working in this space. Risk capital, so grant providers like ourselves at Lemelson and others with concessionary type capital. Market access, big air conditioning companies coming to the table saying we need downstream that kind of innovation happening. And the goal was to reduce to increase the efficiency more than fivefold for air conditioning. We're going to need more air conditioning. We're going to need to make it affordable. We're going to need to make it with less contribution to the climate change problem itself. And then they also brought in the political will of the government of India, who said that they would help to create market-ready opportunity and political will and policy change to take up these technologies when they hit the market. What it did was it sped the process of identification, evaluation, iterative innovation, and testing. And those promising technologies that came out of that, in fact, there were 2 technologies that came forward that were dramatically better than fivefold increases in efficiency. They're now on an accelerated path to market with existing downstream players who have market reach and support and government support to make that happen. So I think those kinds of proactive partnerships that don't leave the companies kind of struggling to find their way through the path are really needed in this space to accelerate that path to market for great ideas and take them forward. And I'd love to share some ideas about some other ways of doing that if we have time later. So thanks.
Thank you, Carol. This was very comprehensive and impeccably structured response to what I was looking for. You gave me the kind of almost an entire strategy for a philanthropic foundation to kind of engage in the climate tech space. But the key word here is that apart from what needs to be done, and you give me the kind of almost you covered every dimensions of the climate tech innovation support that is needed. But the key word I'm taking out is urgency and the magnitude. That's where the philanthropic capital need to be very, very open about this space. And that's what I would say that's the takeaway message, that if you want to look at the climate tech, it's urgent and the magnitude is so big that we would be doing just a fraction of the market by capturing that. Moving on to my next speaker, I do plan to come back to each of you with a second round of questions, and some of the questions coming from the audience I will put in that. But moving on to my next speaker, everyone, Dune Foundation has been doing phenomenal work. The Sun Funder case study, or some of the work that you have done that resulted in almost transforming the sector. And Sun Funder to some extent the climate tech. It can be classified into many of these. So after Carol's remark, I would also like to see if there are certain things that you guys are doing very differently. Is there something that you are doing, or you are kind of bringing new dimension to that, as well as what is your strategy, for the climate tech? It is kind of urgency and the increase in magnitude, or you are looking at very differently. So over to you for your remarks. I do have a couple of questions coming from my audience, but I'm parking them for second round. Okay, over to you.
Perfect. Well, thanks for the kind introduction. And I must say I agree with a lot that's being said today. So as you mentioned, I work for the Dune Foundation, and our aim is to help starting entrepreneurs with a green or social business idea to scale and reach a phase where commercial capital is actually interested. And what's been said today as well is that we see that there's a lot more interest from commercial capital into climate tech worldwide. But for some reason, there is still very little capital available in those early days, in the early phase. And unfortunately, a lot of startups are still struggling to reach a phase where they can show actually that what they're building is working. And as Carol also mentioned, especially for climate tech, where R&D, which are often R&D intensive startups, which means they have a capital heavy business model, they're often struggling. That's what we see. And so as funders, we need to find ways to make the best use of our money, because money is limited. So what I would, to answer your question, and to not repeat what's been said today already, because I think all points that have been made already by the panel are so valid. But as funders, let's try to be flexible and really see what is it that those incubators and startups need. What kind of capital is it that they need? And if you dive into that, it comes down to two things. It's capital that cannot come from the investment market because they're not willing to take the risk. And secondly, even if you have investors that are willing to take the risk, they don't have the patience, right? So they probably start pushing for getting those startups making profits as fast as possible. And it's often not the best way of growing for such a startup, because the startups need to concentrate on making an impact, really putting the end customer central in their product. And so as a funder, what can we do? Well, I think one important thing is coordinate between incubators, startups, funders, also grant funders, loans, investors. We need to talk more and make sure that pipeline is really built, and we need to collaborate. And secondly, grant capital is so important for this sector because of that, we need to get those companies to that stage where commercial capital is actually interested. And in order to do that, or way to do that is, for example, using convertible grants. So making sure that we are able to use our money more often to create more impact. And so that is actually something that we try to do at Dune on several levels. So not only using convertible grants, but also with our equity investment portfolio. Everything that we earn, we reinvest. And by that, we try to to let our portfolio grow naturally. So we need to look for ways that we can get synergy out of the limited capital that we have available for these early stage startups by, I think, coordinating more, talking more to each other, and secondly, finding new innovative ways of being flexible, responding to the market, and make sure that we can use the money multiple times. Thanks. I hope that answers your question a little bit.
Thank you, Bhuvan, for this. I think, I love this panel because my job is so easy. Just to summarize, this is a very well-flowing conversation. When Carol summarized what needs to be done by the philanthropic or institution for this, Bhuvan summarized how it should be done. So judicious and high impact use of capital, collaborate and commit to the cause, provide them all the support, identify where the non-commercial capital is needed and pump that. So I think I'm moving very, kind of naturally to this conversation. What needs to be done, how it needs to be done. I'm moving on to my next speaker, and we'll come back to a few questions to you, Bhuvan, after the remarks by Assis. Cell Foundation, and I had privilege of working with Cell Foundation in different capacities previously in my World Bank role, or Cell Foundation is an investor into Aviskar Group. So we have a very, good understanding how they approach this space. But Assis, I'm personally privy to a number of innovations and climate tech things that Cell Foundation is supporting in multiple ways in Asia, in Africa, and you have been taking that approach of bringing all kind of support available to the enterprises. So, how do you see that? Where we can, increase the magnitude of impact? Because I think it's also about how we can, as Bhuvan is saying, judicious use of capital. So, how we can use the capital that we have to kind of create much bigger impact by applying it in different ways. That's one part of question, if you can answer. And the other part is that I would love to know about how Cell Foundation is approaching the climate tech space, based on the experience that you have and how you see the future wrapping up, unfolding in front of us. So over to you, Assis.
Great, thank you, Santosh. And it's been intriguing listening to all the speakers so far already. So I had the benefit of going at last in this round and distilling all the insights and building upon those. So yeah, before I answer your kind of more specific question, let me give a bit of intro overview as well to the part of audience who may not be familiar with our work. So Shell Foundation is an independent venture philanthropic entity registered here in the UK. And although we were created by Shell Corporate 2 decades ago, we are, independent in our work, as in there's a separate entity, and we have, our own board of trustees, and we also manage, other than the endowment capital, we also have co-funding relationships with UK government, FCDO, and USAID, where we deploy some capital and match fund that with our own. So our broader focus generally tends to be in this whole context of climate tech. Let me just sort of maybe qualify, like climate tech, it used to be clean tech and now it has evolved into climate tech, but now, there's so many subsectors and, themes that are within climate tech, but where we are obsessed with, I would say, within Shell Foundation is 2 or 3 specific themes. We are very concerned about that, and maybe we don't do a lot on the other parts. And those themes are energy access, which is, you can say, rural electrification in Sub-Saharan Africa, some part of Southeast Asia. Some of you may know it through the SDG lens, SDG 7. So we were created, reason that are is to kind of target, SDG 7 universal electrification by 2030. So that's one of our core sectors. The other is a lot in ag, productive use of energy, and e-mobility. So I would qualify my remarks or whatever we are doing by saying that we are only operating in that, and there's so much opportunity beyond that as well. So with that sort of overview, I'd say we have had the experience of being a very active venture builder over the last couple of decades, other than being direct, funding grant providers. So we are very hands-on with our, ventures, and we create those investable pipeline to a level where they become attractive for Series A or Series B investments. One particular case example I can mention is, in India context, Husk Power, which many of you may be familiar with. It's a mini grid company. which we provided more than 10 years of patient capital and take them to a different journey. And now they attracted, later stage rounds of capital over time. So that's, I would say, is a kind of, exemplifies our approach, and I would say, like, because we work with a number of co-funders and we have, over time tried to tackle it. Ecosystem is the is the word for this session. Also, it seems so. I'll come to that, but maybe before, I'd answer your specific questions on those, which is around, how do we approach this whole climate and climate tech space. I think taking a step back, from a pure geopolitical context, we should realize that the world of energy access, which it's been quite narrow and niche, has been quite disconnected from the broader energy transition conversation that's been going in the West. So energy access and energy transition, there's this kind of different universe. And one of our goals has been to drive the narrative of inclusive and just energy transition, in the broader, dialogues that's happening. And what I mean by inclusive and just energy transition is to make sure that there are more than 800 million people still who are without electricity access in Africa, and many in India is also without reliable electricity. More than 2 billion population have unreliable electricity. So when we talk about transitioning to clean power, it should be as much as about replacing the existing non-renewable sources, as much as about creating new supply with these renewable sources, and ensuring that the true BOP customer base or beneficiaries are benefiting from that energy transition. And so even our sort of messaging towards the COP and everything has been making sure we attract the right stakeholders with the arguments which appeal from what is the climate case of when we talk about energy transition. So one big research we did recently, for 2 years it took us to kind of come to that, was identifying more than $200 billion of opportunity for climate finance opportunity for the energy access sector, and it has the potential in pure mitigation terms to replace, I think, more than 630 million tons of CO2 if we achieve SDG 7. So what we need is more of those, hard evidence of research, which we can take to our leaders, in the private sector, in the public sector, or to the leaders at the COP, and say that this is the real tangible case. And I would encourage within climate tech also, there are obviously different types of research happening. What is the mitigation and adaptation sort of impact case? Sometimes that is missing. So it's just making sure we are grounded within that research. So one of the goals that I have, or we have at Shell Foundation, is to attract more mainstream climate first investors, we call, towards our sector. And when we say climate first investors, it basically means those who have had net zero motivation, or pure asset managers, asset owners, but they haven't looked at the kind of livelihood impact that is necessary, that can come along with the climate impact, and sort of make those sort of engagements. So I think that was broader overview. In terms of, since I like to be more solution focused, I'll say there are 3 types of things we are doing within Shell Foundation towards these sort of I think in broader climate tech as well, and which sort of builds on what, let's say, Carol was saying on ecosystem building. I think I will also allow Anand to talk later about our program that we are doing called Powering Livelihoods, which is tying together the ecosystem building part as well as the market accelerator. And that is all within climate tech. We are focused on pure one sub-segment called productive use of energy, and that is like agro-processing types of assets, solar powered, even agro-processors, or, irrigation pump, or textile assets, equipments. What we realized there was that it's a very nascent market. It's a very early stage, it's not ready for commercial pilot. So we'll grow and see the team. They have been working together to do a lot of commercial pilots on one side to prove the model. But at the same time, the uniqueness of that program is they're working with the MNRE ministry as well towards favorable policy change, and hopefully, over time we will see some of that coming. But combining that, ecosystem building or evidence generation or data generation that can attract the climate investors on one side, along with the commercial pilots or pure acceleration part, which Will Grow is quite an expert in, is one unique model in the ecosystem building part. And other two, since I've spoken for long, I'll cover other two types of solutions. One is around new financing structures. So other than catalytic capital that Bo and I also mentioned, we have been doing a lot of guarantees, or first loss of blended finance model. So we just did a big guarantee in India with Rabo Foundation and IKEA Foundation, along with DFC coming together, which is looking at, again, broader ag sector, but also ag tech, which is, where this climate tech sits. And it will be like giving, lenders in India enough guarantee so that they can lend to early stage, ag enterprises. So again, and similarly, first loss arrangement and blended finance we've been doing for a while. More of that we need, especially this nation climate tech space. And the last thing I would say is new market instruments. We do need more new market instruments, especially in the environmental markets. Everyone talks about carbon markets, but if climate tech, startups are quite nascent stage, they are not able to capitalize on that. So we are working on new market instrument where they can be aggregated together in ways that it will allow for them to benefit from different types of environmental market, be it the carbon market or REX or something. So yeah, I'll stop there. I think
Thank you, Assis. I think there are a couple of questions from the audience for you, but you answered that. The questions were which sectors you are focusing and what all kind of intervention you are doing. So you've covered that. But I think, the takeaway for me is that apart from, what I have, heard from previous speakers, the focus on the venture building, not only supporting the early stage, kind of climate tech innovations, but taking them through to the journey with a long-term support and making sure that they are, converting into a venture and getting to raise capital and the innovations in the new financing structures, risk mitigation mechanisms to let the commercial capital flow into that. These are some of the things that would immensely benefit the climate tech innovation space. So I think, I'm going to be ambitious to start the second round. And in that round, I would also try to capture some of the questions thrown at me from the audience. So I'm going to start with, Assis, with you, because you were the last, so I'm just going in the other order. Quickly, if you can respond into a very quick thing. When you say venture building, can you say a couple of things that could be a lesson for others who are looking at only supporting the early stage? Why did you adopt a venture building approach? Which I was saying that, okay, I will support in the early stage and then I will let you kind of navigate your way once you know how to walk.
Yeah, good question. So I would say, fundamentally, all of us here are operating in what we call nascent markets. Nascent market is like, it's very early stage market shaping activity where, a lot of startups, are looking for trying to, there's often, a lot of early stage startups get that blame that, oh, you're trying to do too much, just focus on one or two things. But they can't do, focus on one or two things if the different parts of ecosystem are not there in place, so they need to. So when we say venture building, we get hands-on in terms of supporting them with their operational issue, HR issues or marketing needs, and we hire retainers to help with that. We also get involved in their sort of future fundraising now and actively fundraise on their behalf. So as much as we are funding, we're also fundraising for them for the future rounds. So because ever since, we've been involved in this subsectors, they were always been like, a level of maturity that the sector was going through, is still going through. And they needed much more sort of ecosystem support rather than just focusing on building their business. And that's how we got quite involved. So yeah, and it involves, as I said, different functional, aspects as well. And making sure they deliver and scale to a level where they can attract commercial capital.
I think that's fantastic. I think this is a case study in itself that how Cell Foundation started with a very early stage enterprise and took them to a scale and still be part of the journey at each and every stage of their growth. So I think venture building is something that this space also requires to have a long-term support. So Assis, thank you for that. And I think I have taken some notes and I was privileged to be part of some of the jury selection process of Powering Livelihoods Summit, a brilliant program. We are all looking forward for the outcome. So great work done by the team. Moving on to my next speaker, Bhuvan, I think there are a couple of questions also for you, so I would kind of put that into consideration. What are the sectors that you are kind of especially focusing on in the climate tech? That's one. And second is that, when you say judicious use of capital or the collaboration within the different kind of philanthropic foundation, can you suggest some of the examples where the foundations or how the foundation can come together to nurture the space that requires all kind of support? We know that a lot of you have built a tremendous amount of impact working alone, but many of you do work collaborate. But I could just dream about that. What happens when all of the philanthropic money start thinking together and focusing on one problem? So how to collaborate and what is the focus for Dune Foundation on the sectors and businesses?
Perfect. Yeah. So to answer your first question about the sectors, so Dune is active on several aspects. First of all, renewable energy, which is focusing on energy access as well as productive use. We're focusing on circular entrepreneurship and also on sustainable food systems. And particularly the intersections between those silos are very interesting as well, because what we see is that in order to make this transition happen to a greener, more social inclusive world, the problem needs to be tackled from so many sides and areas. So so that's also why we work on a broad set of sectors. Your second question, well, I wish I had the answer, because if I knew how we could work so much better, I think these kind of discussions wouldn't be necessary. But what I do see is that Dune as well, we all have our specific mandate, right? And that's logical, because you have only limited budgets and you want to make the most of that. So that's why you create a focus and an expertise. But often the startups are struggling that are not fitting in one of the boxes, right? So maybe a suggestion to the sector and also looking inwards as well, because we could do that better as well, is also to be more flexible and to also think along more with startups, because tackling the problem from the view what is needed, what does the sector need, instead of what can we fund or what is our mandate, basically. So that would be something that I'd like to at least suggest.
Thank you, and I think collaboration would happen automatically as we start working together and starting to highlight the problems that need to be solved. So people will come and think, start working on that. I'm moving on to Carol. Carol, I think I'll give you your time to respond to the couple of examples that you had. I have in my notes. But before that, there are some questions from the audience. And one question is very specific, saying, can grant capital specifically support fund managers such that they can set up funds structure that deliver impactful investment? I think to some extent, Assis hinted at that, because they are talking about some kind of mechanisms. But Carol, your opinion on that? And second, what are the sectors and businesses that are priority for you? What are the things that you are prioritizing, or climate tech overall is a priority? So these are a couple of questions that you can answer and give the remark that you had curtailed in the previous round.
Great, thank you. Yeah, so first of all, just in terms of sector specificity in general in our portfolio, we are sector agnostic. We are driven by the needs in the communities where we support work. And so in our climate portfolio, however, we fund everything all the way from things addressing mitigation all the way to adaptation. And so from things that are very technologically nascent in terms of carbon capture and reduction, to things that are somewhat more mature in terms of, broad and fairly based access to renewable energy and the use of that renewable energy in livelihood creation within, rural communities. We fund everything across the board there. We really are into creating the ecosystem that will span across those sectors. In terms of the second question you had from the outside was, can you remind me again?
The one was that, how, whether the grant capital can specifically support fund managers so that they
Yes.
can set up the structures
Yeah.
to,
Yeah. So absolutely, that is the case. And we have in the past, we don't tend to invest directly in the companies. We invest more in those entities that invest in the companies because we feel it's important to build the capacities in the local environment of people who actually have the skill sets to mentor, to bring the entrepreneurs together with the kinds of expertise and so on that they need. And so when we do invest directly in funds, and in investing in funds, we have helped to build capacities in those funds by either offsetting what are the initial management fees until the fund can get up and running and actually become financially self-sustaining, and or providing additional funds on the side through grant funding so that they can bring technical assistance to the groups that they're investing in that they may not be able to cover with the overhead management fees for those funds. So I think there is a real opportunity for philanthropy to offset some of those initial costs until in these nascent unformed markets, one can get to the point that the returns are going to cover the management fees and the technical assistance fully. I alluded to earlier that I think there are some ways of creating more integrated and accelerated pathways to market. I'm going to mention just two of them. One is, I think for those of us who have the luxury of working across both philanthropic to true investment capital, we can use our money more smartly. And I'll give an example that we are doing at Lemelson, which is we actually are investing in funds that cover all of those valleys of death. So if you think about the startup formation valley of death, we're investing through concessionary capital equity, but at a much reduced rate of return in Virtue Lab, which takes early stage ideas and turns it into spin out companies. We are implementing support for a PRI with another group, which is taking companies through the Valley of Death associated with product development. Really unusual model, brings together downstream corporate consumers of the needed technology with incubation capacity who are putting money, stake in the game there. Technical experts, concessionary investors like ourselves, and standard investors who are a bit more downstream to actually accelerate that path for companies to market. We're also investing in a new fund that's going to take companies through that market validation valley of death. So unique model. One Ventures providing both a concessionary sleeve as well as a standard market rate investment sleeve. We are investing in both with our grant capital in the concessionary sleeve and our market rate endowment returns in the standard market rate investment sleeve, but very creative to have one fund set up with those two structures. And then finally, we're investing in sort of traditional market focused fund like Lightsmith. So we are helping to see that companies, and we're seeing companies actually transition across these investors. So I think there's a real opportunity there. If I have just one more minute, I'll mention another example, which is a group called Third Derivative, which is working together with New Energy Nexus, actually to create off the ground a structure that's truly, I think, unique in terms of having those downstream corporate customers waiting, informing, and guiding the path for promising companies on new technologies, and then having late stage investors who are also skin in the game, helping to inform what the companies need to do to be ready for that downstream market rate investment, and concessionary investors like ourselves, coupled with the acceleration capacity of New Energy Nexus. I think it's a brilliant model. I'd love to see more of this preemptive, associative coming together of different capacities to smooth that pathway for innovative companies with new technologies.
Thank you, Carol. I think fantastic kind of range of inputs that we have got on what philanthropic capital can do. But the one point that I have, and I always err on the side of the entrepreneurs, the capital is very limited. The kind of problem we are talking about, the magnitude of the problem, and this thing. So my next set of question is to about Pratap and Anand. And Pratap, to you first. It's also a question from the audience. Are Indian foundations lagging the global peers in terms of providing grant capital to climate tech? I know that this question cannot be answered by the global foundation. So you guys are at the other end and you can comment on that. That's the one part. Second part of the thing, because we don't have time, so I would ask you to respond to that. If you had a wish list and saying that the two things that I need the philanthropic capital to prioritize, irrespective of what we hear from the philanthropic capital, but from the practitioner's perspective, what would be? You can specify to a label saying that, okay, I want them to have a specific stage focus intervention or a sector focus intervention or an instrument, so that there is a clarity on that. And I think, Anant, I would repeat the question to you, same thing. So first Pratap and then Anant, and then I would kind of, close the season. So over to you, Pratap.
All right, thank you. The first question, maybe I may not be well positioned to answer. Maybe I could ask. It's all right, Anand, to take that up. I can answer the second one easier. Wish list for Christmas. But I'll share one project that we did last year called Electron Vibe. This is a program funded by SED Fund. One challenge of getting energy startups to come to talk to DISCOMs is there are no linkages. DISCOMs here, electric utilities, perhaps could benefit a lot from the innovation coming from startups. We ran this program as a pilot, and with this pilot, we got with this pilot for the program, we got actually 2 pilots with 2 DISCOMs. It was quite heartening, and SED supported us this year again to strengthen this. And we just had a meeting on Wednesday. 60 people showed up, DISCOMs and all the other key stakeholders in the electricity space, suggesting that there's a lot of interest figuring out how to get the startup ecosystem talking to players like DISCOMs. And when I talk to a lot of, to generalize a little bit more, I talk to a lot of startups. It's a long gestation period for many B2B startups, mainly because the sales cycle is very long. The piloting cycle is very long. And one way, of course, capital can help, but there's, I think, something that we learned from Electron Vibe is if we can build linkages to groups to demand, that could shorten, solve some of this problem through this platform rather than, for example, through the capital, increasing capital to a wider set of startups. And this can be applied to plastic waste. We talked to a lot of the FMCGs. They are looking for startups. We talked to real estate developers. They're looking for eco-friendly construction materials to pilot, and there is a huge surge cost. I think this is a great fit for grant capital to kind of shorten this access to corporates, access to piloting, where the piloting can even be, of course, funded by the demand side. That would be one, is more capital for there. The second one, just to follow up on Carol, it's almost like you served it up for me. We actually do have as I mentioned, an angel network to try to get capital in. And one thing that we have been learning is that it's hard to get the first check-in. So we're looking at a seed accelerator model in our case, but I think this applies to others where in our case, we have about 150, 200 startups each year, is finding ways to give some grant, 25 lakh, to promising startups, and then helping put syndications together, maybe that one first CR check, to draw in the private capital that is actually perhaps sitting there. I think this is a powerful way to take grant capital to crowd in more private capital. And I think given what I see with lots more accelerators, Billgrow, ourselves and others, I think this model can be very powerful to solve this problem where capital is hard. It's where private capital does not want to come in. No one wants to get 25 lakh. And even once CR checks are hard in and of themselves, but if you can be part of a syndication, then I think we can see power that comes from an instrument like this.
Yeah, thank you, Pratap. So just kind of highlighting what you just summarized in two pointers. One is that the innovation meeting the right partners, so that the kind of the corporates and others who can benefit from that, they are not kind of searching each other, but there is some kind of mechanism that could make this search shorter. So we can build on that ecosystem, how we can make them collaborate. And second, I think the segments where the commercial capital is very difficult to kind of get is the segment where the philanthropic capital can focus more, because there is no one else catering to that segment. Anant, you talked about the commercial value of debt, and also I know that the Billgrow has done a number of incubation and innovation and innovation support, and Lemonson Foundation has been working with Billgrow for quite some time. So you guys have the luxury of understanding the different approaches. Still, I want you to kind of highlight for the sake of this other incubators and inventor supporters, that what could be a couple of wish lists that you have that the philanthropic foundation could focus that could benefit this sector at large, and the one question that I had, which is whether the Indian foundations are lagging behind the global peers when it comes to focus on the supporting climate tech incubation ecosystem.
Yeah. I'll start with the first one, Santosh, about the Indian foundations. I would say, I mean, the immediate answer would be yes, and probably, I mean, there are a lot of reasons for this. I guess, the Indian CSR is slowly evolving, and a lot of focus used to be much more on projects and, where, obviously, higher immediate impact or immediate kind of turnaround would happen, and higher visibility and, better brand building and so on. But I think this is definitely evolving. We've seen, quite a lot of winds of change sweeping through the CSR policies and CSR, the way it's being approached by some of the larger corporates and the foundations. So I would say that, firstly, I think that focus on kind of longer term change is coming in. We ourselves at Willgrow have, been able to now using, Indian CSR funds, incubate several of the startups which are in the space of climate action, and using grant capital or, much more patient equity capital as well. So this is definitely happening, and I would say, that's good news for everyone, to look forward to a lot more of this change, right? Coming to your second question on the wish list, I would say a couple of things. I mean, I think again here also, some of the people who are around this table, be it the Lemelson Foundation, Shell Foundation, Doom Foundation, I mean, they've been exemplary in terms of how to approach, funding for climate action in its various avatars, right? And really can't ask for much more, can't ask for more. And we work with all of them. It's amazing the amount of, insights they bring to the table, the amount of flexibility they offer. So I would say, one thing about this sector, I would say is, definitely it's a fast evolving sector. So that flexibility of the funds, is extremely important, because I think what happens is, we try to define a certain program when we start off, and then as you move along, you start seeing a lot of opportunities coming up, be it because of change of government policies, be it because of, new kind of tech opening up. So I think one wish list, of course, is to have a lot of that flexibility as an incubator or as as an entity which is driving a program. I think having that flexibility to explore and to kind of modify on the fly, just like our startups would. I think that is one wish list, and to a large extent it is being supported, but maybe a little more of that. Secondly, I think measuring the impact of climate action, right? A lot of today I think it is still not a very mature space, right? And as an incubator, as a social enterprise incubator, we always struggle on how to report this impact, how to measure this impact, right? Typically, you only talk about GHG emissions and maybe a couple of other parameters, right? But I think if we could all get together and build a common framework for reporting impact around climate action, right? I think that would go a long way in kind of evaluating some of these programs, in reaching common understanding, and more importantly, Ashish and others spoke about the innovative market instruments. Now, those instruments can, especially say outcome-based instruments, can come into play only if there is a common way of understanding how climate action impact can happen. So this would be another wish list, to reach a common framework of, how do you measure the impact beyond just greenhouse gas reduction, right? There are so many other things which are associated with, the climate change and climate action. Yes, that would be my wish list, Santosh.
Thank you, Anant. And I think we are just about, closing on the time. But before I close, I think to just summarize the big one-line summary that climate tech invention, climate tech support is critical to achieve the goal that we have set to tackle the climate crisis, the Paris Agreement and the 1.5 degree scenario, which is almost getting impossibly beyond our reach. And this requires a fairly large amount of capital and fairly flexible way of deploying that capital, because this is an emerging sector, very nascent sector. And we have been blessed to have the three foundations who have not only kind of done exemplary work, but also have tons of experiences to say that how they can set the sector. And they have the track record of setting the sector, be it the ecosystem building approach of Lemelson Foundation and providing support to all the ecosystem players in a very comprehensive way, or a very long-term committed goal-bound support of venture building of Shell Foundation or Doom Foundation's approach to kind of identify where the commercial capital is missing and get the capital and solve the problem. So all of these approaches have a very, kind of valid reason for being magnified in terms of the quantum of money to be deployed, as well as increasing the scope that what they can cover. I know that everybody has a limited pot of money to play with, but we need more of that to come to the sector. On the kind of practitioner side, both Anant and Pratap highlighted the nuances of climate tech incubation. So there is a value of debt from the technology point of view that you need to overcome through the research, through all the support that is required. Then there's a commercial value of debt where you need the philanthropic capital to cross that and be eligible for the commercial capital. The second challenge is that the climate tech is a very nuanced approach, many segments, sub-segments, and they are all very unique. So how to kind of factor that in? Probably we need to be cognizant of the uniqueness of different spaces. We cannot have a blanket approach of supporting climate tech. It has to be very nuanced. So I think this space requires a very mature handling, a very aggressive handling in terms of commitment, and very flexible handling in terms of the approach. So I think these are the takeaways from this discussion. Thank you very much to each of my panelists to kind of very eloquently describing those insights and presenting in a very less jargon heavy way to the audience here. And a big thank you to the organizers for giving us an opportunity to discuss this, because we all are committed to the climate action, to the climate goals. And this would surely go a long way to mobilize the capital, to inspire the entrepreneurs, and to kind of motivate the Philanthropic Foundation to come to this space. With this, I thank all my panelists, the audience, and the organizers, and have a good weekend and enjoy. Thank you. Over to you, Deepansi.
Thank you, Santosh, for a compelling moderation and summary, I must say. And thanks a lot, panelists, for a very insightful discussion. I think one personal and very important takeaway for me was we keep saying that, and we keep iterating that patient capital is needed for early stage climate tech entrepreneurs, but we do underplay the role of incubators here. And we first need more patient capital to entrepreneur support organizations itself, because they are the ones who are weaving the ecosystem together. So I think that was one key takeaway for me. Thank you so much, panelists, and thank you, audience. We now move to the final session for the day and this entire 2-day event called Journey from Idea to Scale, a fireside chat with India's climate tech entrepreneurs. I request the audience to now move to Audio 1 for this session. Thank you.